what is up, dudes and dudettes? This is Due-Diligence here, and let's dive a little bit deeper on what MMAT stands for, what MMTLP stands for, and sort of we have to discuss the fundamental issue I have with this company in terms of how the management think that they could solve their problems. Sure, they could have went away with $10 million from the merger, but in reality, it wouldn't work like that, okay? And then, they probably can walk away with $250 million actually, but because of how they're doing their PR, they end up with $150 million instead of $250 million. But is it still a really good, progress from where they were before? Absolutely, absolutely. For a company that doesn't make any profit, have very static revenue stream, it is a huge step for them. So if you're the CEO or the business owner of the company, what would you do is you will utilize that $150 million trying to make your business process better, or trying to sort of invest in a certainty. But the way how they manage their money by acquiring a company that does not have a guaranteed like a intermediate cash flow, right? It's sort of like, of course, you guys are saying, hey, it's kind of like a secure investment because you buy it with a 60% premium and you probably will get that money back in about 10 years. And they have a big contract coming in and blah, yada, yada, blah, blah, blah. And, they're making currency or these bills, right? These notes for the Canadian bank. We all know that they're doing it for the Canadian bank since they disclosed that it's for a G10 bank. And we went on a very deep dive on the due diligence and we realized that, it's none of the other banks, because we all know that who are making those notes for the other banks. So it has to be the Canadian bank. So it is the Canadian bank, right? Another thing that you have to understand is, as an entrepreneur, as a CEO, when something is not working, it's not your job, or it's not a good CEO or entrepreneur's job to sort of figure out more ways of doing the same exact thing without changing your fundamental belief or fundamental process of doing the thing that you're fail. It's like the logic where you open up the restaurant and somehow this restaurant is failing and you're like, oh my God, we're losing, 5K, 8K, whatever amount of money every single month. And you're like, the only way that we can save our failed restaurants is by investing more and more restaurants. And then just open up more and more locations, and then let's see how it goes. It's the same thing as, a lot of people going on, a lot of these investment banking interviews and tell us that, hey, we asked them, we're asking like, hey, like, why do you think we should give you the money to invest? Or in this case would be something like, hey, like why, how was your track record? If you are losing money, or if you are, significantly underhedged your portfolio and exposed to more risk, and then you lost this amount of money, and then you sort of like, your risk exposure is how much percent of your portfolio. How do I know that if we give you money to trade or to invest or do whatever, it wouldn't happen, the same thing wouldn't happen? A lot of people will just be like, oh, I don't think the small amount of money I have is enough for me to actually make money. But think about it this way. If you cannot make money with $1,000 or $5,000, how would you be able to make money with $10,000, $100,000, and $1 million? Where is the logic in that? It's the same. If you put that logic into MMAT, it's like, okay, so we figured out that we're going to make those optic glasses. They're not selling anywhere. We're not pivoting. And we can find an OEM that really are super interested in this, and perhaps this is not the way to go. So maybe we should pivot to something else. But instead, they started, expanding their product line by making more and more product. It's like introducing an app. You haven't developed your core user base, and you decided to expand your features. And by expanding features, you're burning more cash. And you only have $150 million. And guess what? You have less than $50 million left. By the end of the first year of operation, right? Because, by merger end, it's around June 2021, right? Merger ended there. Or July, whatever perspective you have. Technically, it's June 28th. It's only been 6 months. Technically, it's only been nine months. They've already spent 2/3 of their entire cash raised in this round. And let's see, what's going ahead? Russia and Ukraine war, right? A lot of people were like, hey, it doesn't matter in the long run, we can just go scoop in some Russian assets and everything. I totally agree with that. But the thing that I don't agree upon is you guys think that the world is just going to go on as it is. It won't. Because the Ukrainian-Russian war actually have a long-term effect on the entire globalization process and on the entire global economy. That means it's going to be a setback for globalization. It means every product that we see on the shelf in Whole Foods, in grocery stores, CVS, whatever grocery stores you go to, they're going to be much more expensive because of the war and because of the long-term effect of the war. And that means the manufacturing cost and the lead time for shipping is going to be dramatically increased in the next 7 months, right? Of course, if you just listen to that part, you can probably make money off of that by placing some interesting bets on certain companies that are stuck on the supply chain, which we probably will talk about in Patreon, and maybe, put a very simple video, 5 or 10 minutes, or maybe 2 or 3 minutes just to outline that. And, if you guys listen to that, and all of the videos on our channel that have less than 60 views or less than 100 views usually have those trade ideas. And if you actually listen to that and utilize the intrinsic logic in that, you can place some bets and make consistent return, right? Go back to MMAT situation. It's just like, okay, so I'm going to give more features. I'm going to do nanoweb. I'm going to do this 5G thing without really having anyone commit to us. And you guys know that I technically work for one of the largest OEMs in the entire world. Is there a demand for that product? Probably. But how you as a company to convey that demand to OEMs like us will be very important in the long run. Because essentially, there's no way for you to just hold on to the huge capacity that you have or potential capacity that you claim that you're going to make this much of films or foams in this period of time, the first quarter, the second quarter, the third quarter. No, that's not how life works. Life works is you have to match demand with your supply. Right now, your demand is literally almost zero. Just because you have the capacity to make certain supply to match with potential demand doesn't mean that you should produce those. And it would be absolutely stupid and horrendous to produce this much of inventory and just hold it on hand. What are you going to do with that inventory if no one is trying to buy it? Your initial goal was to license out your technology, and you have to figure out why people don't want to license your technology. It has to be something wrong with your presentation, or it has to be something wrong with your business model, or it has to be something wrong with how you perceive the customer would use your technology to do certain things. Maybe the primary market is not 5G. Maybe 5G is too early to enter the market. Why is that? You have to think about it. You have to think back as an original entrepreneur. And I know a lot of you guys are like, okay, they're a public company, they should be successful. There are more than 3,000 companies on the NASDAQ exchange. How many of them are actually successful? How many of them are actually profitable? And how many of them, during the process of their listing, they actually went downhill, get acquired again, and just becomes sort of like a public scapegoat of certain capital moving from one place to another? A lot of them. And a lot of those companies, they go public sort of in the framework or with the framework in their head that they just want to cash out and they want to reap retail money or retail profit, right? By luring retail investors to buy into them, do a pump and dump, and retail investors will lose a lot of money and eventually they just cash out. A lot of them are like that. This is why a lot of people are shitting on capitalism. But that's a part of how market works. Even in a socialist society, it will work like that too. You see? Like, all we have to do is do our due diligence and figure out a most rational way to rationalize what is going on and then place our bets accordingly. If you think something that will go up to a certain point, you have to have a reason for thinking that. You have to have a clear exit strategy of, hey, I'm going to buy at this point, and if it fluctuates and drop down to my stop loss, I will just dump it. When it actually looks better, I will probably buy it in again and have a better understanding of this company, better understanding of this business model, better understanding of its fundamentals, better understanding of who is investing in it, who will invest in it, and who will FOMO that, right? And then you have to set up a realistic price target for you to exit. And when you exit, you don't think back and move on to another trade. It's not rocket science. You just need to figure out what is the reasonable expectation for you for this company. And it's reasonable that you guys don't have an understanding because you don't work in this area or you haven't dealt with this before. For me or for us, I had failed startup before. I know the struggle. I know what is going on as an entrepreneur. And I know that there are a lot of CEOs in existing companies that are really entitled. This is why I don't like their management from the beginning. And guess what? All my assertions come out to be true. They do have internal control issues. we might be facing financial fraud, but we're not pointing fingers at anyone or any assertions, just, for shits and giggles. Because we're not financial advisors, we do not give financial advices. Therefore, everything we say on our channel is for shits and giggles. But does that mean that there's no merit of what we say? I mean, everything we say on the way, including, when our channel started, we said, hey, it's a great time to enter into oil. And a lot of you would be like, oh my God, it's too expensive to get in. And guess what? We've been longing it ever since. And it spiked. Are we right? We were right. Are we right on BBIGs pumping down? You're right. Were we wrong at first for MMAT? We were, but we corrected our mistakes by doing more due diligence and research. I'm not someone who's so entangled up with their ego and be like, oh, we were never wrong. Yeah, along the way, sure, there are points of time that we were wrong, our assertion were wrong. But how do we amend mistakes? Is how we grow and how we make more money in the future, right? If you know that there's something wrong with this company, cut your losses and just move on to something else that's more meaningful or have a higher probability of having more profit. Does that make sense? It would be absolutely stupidity to stay in a company that will just stay stagnant and they have no long-term or go-to-market plan whatsoever. Again, we're not financial advisors. We do not give financial advices. This is just some real talk, absolute pure honesty. And I don't care if you guys hate us. If you have any questions, comment down below. We have a Discord channel. You can go and discuss those questions with Discord members. And a lot of our Patreon members already know our assertions from months ago. And a lot of them already exited, right? I mean, you guys would be like, oh, they bought in at $5, they exit at $3, they lose $2, right? And then, oh, what happens now? Oh, if from $3 to $1, and maybe it's gonna get delisted. Is it better to lose $5 entirely, or is it best to just lose $2? I mean, it's for you to decide, right? If you like those very truthful content, smash the like button and subscribe. If you don't like us, we honestly don't care if you don't listen to our content. It's just for you guys, it's just another opinion, right? Online, and you have your choice to listen to it or take account of it. I mean, again, investment have risk, and you have, it's like a game. You can play if you cannot deal with the risk, and you shouldn't play if you don't understand how to do better due diligence or research on those products or on those stocks, because you're gonna lose your life savings. And again, we always say to our Discord members and Patreon members, you only should bet the amount of money that you're willing to lose, because nobody can be 100% right. What you have to do along the way is you have to understand like what you're doing wrong so you can change it. It's not being super stubborn and be like, oh my God, I was so right. This thing is going to be great in 5 years or 10 years. But look at the slow growth projection we're going to see in the future, right? Look at the macroeconomics. Look at all of the indicators that are saying that, hey, there might be something fishy going on with this. Anyways, this is it for this video. Hopefully that helps. See you guys on the upside.